Hey, what's going on, ladies and gentlemen? Hope you all are doing well and had a great trading week this week. Happy Friday to you all. I wanted to create this video for you all tonight to give you a little bit of a recap as to what's been going on in the VIP community for those of you who are not currently involved. And for those of you who are currently a part of our program, you guys can get a glimpse of all the analysis that we have sent out this week, the reasoning behind it, and really just to allow you to see what trades you took, what trades you missed, and how you can be doing better to best involve yourself within the community. So this is fully transparent. I'm going to go over all wins, all losses, all floating trades. I'm going to show 100% complete proof of everything that was sent within the VIP Discord community. So there is no way in the world that I could ever lie. Everything will be proven here, but I wanted to just touch base with you all, kind of going over a little bit of a recap to show you not only how we trade for those of you currently not in our VIP, but to give you guys an idea of, maybe if this is a style of trading that you would like to be interested in or happen to be interested in that resonates with you. We would love to have you on board and get you learning about this because this is quite an amazing strategy. We have really optimized it over the years, and we have done a phenomenal job with our program, especially with our clients. You guys have been absolutely killing it. I see stuff posted all the time, trade after trade people are taking and winning huge risk to rewards. I'm so proud of you all. So let's start off by talking about Aud Nzd. This one did occur, I believe, 2 weeks ago on Monday. We're gonna start by going over the past 2 weeks of trading. All the trades prior to 2 weeks, you already know I created a video on it. We had an historic week or an historic past couple of weeks back in June, and it was absolutely awesome. And we're just continuing this huge winning streak that we're on. So I wanted to go over the past 2 weeks of trading. Last week, I did come down with COVID and we did take a little bit of time off. We had a few trades last week. Most of the trades were taken this week. So I want to touch base on the past 2 weeks of trading to get you guys updated as to what has been going on. So I'm sure all of you or most of you should have, well, not should have, but probably have seen all of our IG story posts. And I just want to clear up the fact that those are actual live trades. And I'm going to prove it to you all today. My goal here is not to just sit here and brag or prove all of the winning trades, but really give you transparency for the ones that lost, but also help you understand what we were looking at that particular time. So I'm going to try to go over as much detail and go in depth as much as I can. I do have quite a few trades. However, I'm sure this will be a great learning experience for you all. So sit back and relax. Take some notes if you want. Maybe mark some of the stuff off so you can go back and back test it and understand why we did enter where we did. But I'm going to hop right into it. I'm going to first start off by talking about Aud Nzd. This was something we sent out on, actually, this was actually July 15th, so I think this was a Friday. So 2 Fridays ago. We understood that we had our area of interest right in here, this area of demand, and we were looking at, after the break of counter-trend structure and the liquidity run, a pullback into our repricing event demand level. So this is what we were looking at. We sent that in. You can see the date and the live chart right in here. We had entries all along in here. We had one in here. We had one in here. And I think we had one right in here. I think it may have been right there, actually. I think there were 2 of them, if I'm not mistaken. Those of you who are in VIP, I think we talked about these in June, and it hit in mid-July, I believe. So you can see that this was the exact analysis. We have the pullback. Had a little bit deeper push below the low, but nonetheless, if I scale into a lower time frame, we can see, whoops, I'm going to clear that up. We can see that we had the imbalance fill, which is why we came a little bit lower, but nonetheless, we pushed up all the way and hit our take profit. Well, actually, yeah, we did. We did hit our take profit at 1.1175 for a 1 to 4.41 risk to reward. So for the most part, guys, I am risking 1%. Sometimes I do risk 0.5% depending on how many valid positions are open at one particular time. So in this case, this was 4.41%. The reason why we had that take profit where it was because of the higher time frame. We can see that this higher time frame high here and the higher time frame high back in 2018, we finally went up and took that liquidity. So that was the reason why we wanted to come up into that region of price. We had a beautiful entry. That was, the analysis was sent out before, and it swiftly hit our take profit over the course of the last week. So this one did hit a few days ago, but took about 10 days from its entry point till its overall target. Many people ask me how often or how long do you hold trades for? Well, it really just depends. It just depends on my overall objective, what time frame I'm looking at in particularly. In this case, 1 hour time frame, so it's more of a semi-long-term trade, maybe a week, maybe 2 weeks at most. That's if it just doesn't just go up and hit take profit immediately. In this case, we chopped around for a little bit, kind of waved pretty nicely. You could have taken advantage of this trade here off the demand. I didn't send this out, so I can't take credit for it, but that would have been a nice trade, or really another addition to the one we currently had, really the one that we had here and here as well. So could have had multiple, but nonetheless, 4.41%. Our next one is, I believe, Gbp Swiss Franc. I think that's what we were talking about. Is that here? Nope. I will go over this one soon. I just want to go over them in order in which I have here. Gbp Swiss Franc. All right, let's take a look at this. So we had an accumulation. We had the breakup structure. We pulled back. We can see that the law of effort states, very strong momentum, very slow push back to the downside. We filled imbalance, demand, LPOR, last point of return, and we broke counter-trend structure. So I was hoping, we would get the pullback back down into demand, which was once supply, as we reacted off the supply level. And then we made the higher high, this flipped to demand. We broke counter-trend structure here. This trade, let's go to Gbp Swiss Franc. This trade was actually a loss right in here. We can see we broke the counter-trend structure. We swept liquidity, but then we just pushed right back to the downside and hit our stop loss. I think it was actually below the expansionary move before the imbalance was created. So we did lose 1% on that trade. I will take credit for that and responsibility. But still a good trade. All of our confluences were met. Next one, Nzd Cad. So this one was talked about by Aiden. I believe he talked about this on Smart Money Sundays back on July the 18th. But he sent in this analysis here as well. We had a sharp liquidity run, pop back up into the range, created that higher high formation, and we had those equal, we had equal lows right in here, and we also had the imbalance between this wick and this wick. So let me go to Nzd Cad, and that was our trade right in here. Perfect entry from the demand, had that push back to the upside. We chopped around for a little bit. But we have not quite hit our overall take profit, so we are floating in this. We are floating in a lot of trades right now, and I will go over those, but I'm going to go over them in order as we go through the Discord channel. So we did sweep a lot of liquidity. We broke structure back to the upside. We reacted from our level, and then we broke again, which is why we're looking to add positions, which we'll go over in a little bit. But this is a 1 to 3.86 risk to reward. I'm just going to base it off of where we currently are at this current time. So right now we are floating at let's call it a 1 to 2.2 risk to reward. All right, so 2.2. I'm going to write all this down because I'm going to give you a final percent return that we've had over the past 2 weeks with our strategy thus far. All right, so we had that entry. Let's move on to the next one. Next one, I believe, is Euro GBP. So we came into a higher time frame level of interest, 841750. We swept equal lows, the higher time frame equal lows actually, and then we broke counter trend structure. We closed above this previous high and the previous high on the lower time frame. We retested and we kept retesting. I did not take any of these, or actually I didn't take this trade in here. Actually, I think I did. I don't know. I'll have to go back to my chart. But I know that we took a couple trades. We had one in here, and maybe I took one in there. I'm not sure. I believe I was sick during this time. I took the week off while we were pushing up. But I know I had our first position was at this level, and I think it may have been on an 8-minute time frame at 8460, because I know we swept liquidity coming into New York session, and we didn't mitigate that level. I'm going to just go back and check too. But nonetheless, we had a beautiful trade, Euro GBP. Yes, it was. We did have that trade. The reason why we stopped right here was because we came into a sponsored region. I'm not going to go into this just because it's going to take me way too long, but nonetheless, we swept liquidity, and there was 2 areas of demand. I think there may have been in 1 hour. I'm not going to go into it in too much depth, but we can see that the imbalance was created here. We had the equal lows that we ran. We pushed down into 84174, and then we also have, I think, a lower time frame area of demand in here, in which we also push down into, as we can see, the spike and then the break of counter trend structure. So if we hop down to a lower time frame, I believe it was the 8-minute time frame. As you can zoom in all the way here, we can see the liquidity run that occurred right? Liquidity was built up prior to coming into this sponsored move. This occurred at 9:56 a.m. Eastern Standard Time. So this is New York session time, sweeping all this liquidity. What we can also see is this is during New York session. This is also during Asian session. What did we do here? We had the fake breakout to the upside, enticing buyers, push back to the downside, taking the buyer stop losses, enticing the breakout trade sellers, right? Nope, right back to the upside. So this is a clean New York session manipulative move. And we also created equal lows, liquidity resting just above the mitigation point. We pushed back up, created that liquidity, pushed back down, had a beautiful entry, and we absolutely rocketed from there. So we can see overall we came into our higher time frame level at 8576. This was for a 1 to 9.28. So I'm going to write that down, 9.28% return on this. Then we also had another re-entry here as well. And this was the one that I was talking about in this piece of analysis. I'm actually going to be going over this analysis here later on. I think it was just later on in the post that I made. So right in here, we had the break of counter-trend structure. We swept liquidity, sell to buy, confirm the trade. Repricing event took place at that demand level. Supply flipped to demand. We reacted off of supply right in here. Oops, excuse me. We flipped to demand. We broke counter-trend structure. We pulled back, mitigated, came back down one more time, and then blasted off there. And we can see that with this move, we made 4.14%. Hitting our take profit. Why did I take profit there? Well, we have to look at the higher time frames. It's always very important. So just in case we were to continue short, which we actually did, even though I was expecting upside because we're technically still bullish, high, low, this low, when price closed above the most recent swing point, it was right here. So this was the high that was produced off of this low. We actually came down in respected structure. Higher high, higher low, higher high, higher low. Could have easily expected a higher high, but again, you would want to take profit at areas in which price could potentially reverse from. And I was happy right here, 1 to 9.28 and a 1 to 4.14. I made over 13% on these two trades. So I was going to be very, very happy with that return. We can see here when we first initially broke, we actually had an entry here. This was a 3-hour candle, 3-hour buy to sell that swept liquidity. Institutionally sponsored, we made a move to the downside. We trickled back to the upside. We mitigated that point. We gave this out in VIP pretty much to the T. And then we had a re-entry. I actually had a re-entry here that I sent out to VIP as well. Because we stopped, we chopped around, we failed to make a higher high because what could you naturally expect in a bullish market? High, low, high, low, high, right? But the fact that we reacted off of that sponsored move and we failed to make the higher high, we made the lower low, this acted as that supply to demand flip. So this becomes supply. We pull back up, retest that level, push down, then we have that failure to make a higher high again, and then we just continue to fall to the downside. So this becomes our new supply level. It's very important you understand the difference between a break of structure and a continuation, and also the difference between where your order regions are or your supply and demand levels are really ought to be. So in this case, this was a break of structure. This wasn't just an overall pullback continuation because we're now bearish, right? We closed below it. Also, this is now supply because we failed to make the higher high off the pullback. You naturally expect high, low, higher high, but since we broke structure here, closing below this level, after retesting that once demand, now supply, because we can see higher high, higher low, reaction off of this level of demand. Now it flips to supply. We invalidated this demand. Pushed down, pulled back, went short, pulled back again, tested supply, fell. We have imbalance, we have supply. So the open of that level, I think it may have been the 2-hour, something like that. I'm not quite sure yet. We have imbalance in the last buy to sell within that sequence, 8576. That's pretty much exactly where we came up to before we fell. So not only was our take profit precise, but the actual level in which we reversed was very much precise as well. We can see these equal highs that were run buy to sell. So in here is the sponsored move. Let's take a look at what we could have caught. So I think it may have been the 30-minute. Yes, it was. Higher high, higher low, higher high, higher low, higher high, higher low. We reacted off of the prior swing point, failed to make the higher high, and then we made the lower low to the downside. So this becomes the new supply. Reaction from the demand, flip to supply, right? So this could have been a beautiful trade, but we didn't take it, obviously, because it never pulled back. Unfortunate, but we move on from there. All right, so 2 trades, absolutely gorgeous. I'm going to be going over this one again later on as we go. but that was 9.28%, and I believe the other one was 4.14%, and I think I'll be talking about it here at a later time, so I'll write that down when I get to it. Next one. This one, Euro GBP, I think that was the one we just talked about. Nzd JPY. All right, so with Nzd JPY, as you can see here, I'm going to go to the chart. Nzd JPY, we were technically currently at this point in time in a downtrend. Lower low, lower high. This is the high that created this lower low, okay? So we had the overall pullback. We came into our supply level, and we can see the supply clearly swept liquidity. We ran the liquidity, and we fell, making that lower low. We have imbalance, so this becomes our supply. This also mitigated this supply in here, pretty much this wick. We came up over to that level, higher high, higher low, higher high, higher low, higher high, lower low. We pulled back into imbalance and this supply level, and we fell again, making the new lower low. All right, so that confirmed to me that we are going short. When I say confirmed, guys, I don't mean 100%. It just means a high probability chance. So we can see lower low, we failed to make that higher high, and we made the lower low, so this becomes new supply. We pulled back, had a reaction, but then just blitzed right through and hit my stop loss. So that was a negative 1% loss. I did lose that trade, and I think it actually ended up coming back to the downside later on. Yeah, it did, but, you know, got to lose some eventually. It was a sound trade, met my rules, had all the confluence there, but, you know, some of them you lose. You just got to move on. Next one. Let's see, the next one, Euro GBP. Yep, so I had these two trades. I think we already talked about that one. This is Nzd Cad. Remember we talked about that, our first entry. Let's see the next one in here. Great British Pound, New Zealand Dollar. So this one, I believe, was a loss, if I'm not mistaken. Yes, it was. So we were continuing with the overall trend. We had not come down into our higher time frame level. We had an area of imbalance and liquidity snag at 1.9. Psychological level, really wanted that level to be met. We had distribution around a level of supply that we did tap up into. We could see that this high, I showed with this arrow, we ran this high here, so ran that liquidity. This wick came into something deeper within this last point of return supply. So beautiful trade. We ended up taking two trades, I believe, in here. One in here, which hit to the T, and then one just right in here. So 1 and 2. I didn't take this one because I wanted to wait for the clear sell-off. All right, so we did take two of those, but that was before the time period I'm describing right now. I think that was beginning of July. Yes, this was July 8th. Yeah, July 8th and July 7th. So that was before the time period I'm going over. And that just goes to show, like, even before the 2 weeks that I'm going over now, we even had, you know, a more phenomenal month. But I don't have time to go over all of those trades. I went over those trades in a prior video. So we ended up making lower lows, lower highs, lower low. We wanted to pull back, sweep liquidity, come up into our supply levels. We had two here because we ran liquidity here, and we failed to make the higher high, lower low. So two areas of supply because this one didn't tag up into it. We had a little bit of a reaction, but ended up just coming up and hitting stop on both. We only lost 1% total because since there were two levels, we only risked 0.5% on each of them. So total was negative 1% total, because 0.5% for both. So we did lose that. I was hoping we'd get the reaction, maintain our structure, push down, take this sell side liquidity, because we can see that this low did not take out this low, and to come into our overall level and psych level at 1.9. It could potentially come lower, maybe, we'll see. But for now, there's no trade, and we ended up losing that one. So let's see, next. So this was our re-entry now. We said that we had an entry from this level. We had the reaction, created the higher high. So now we know we're probably not going to come below this low here. So we wanted two more entries because there were two more areas of demand. Higher high was formed. We haven't come up into our objective yet, so the buys are still in order up until 0.81. So these two levels of demand here and here, we can see that this low did not tag down into this area of demand. So this is why two of these are valid. So let's go to the charts, Nzd Cad, really quick. Now we can go over the other ones. We can see here, first touch up, run. We came a little bit lower and tagged into the second one, boom, and then we rose, right? So for this one right here, this one, I believe was, yes, this one was a break even, I believe, because we pushed up and I think, it went break even because it was such a strong move, and then we pushed to the downside. I wasn't able to take any partials. I don't recall taking partials on this particular trade. So I didn't make money on this trade here. But I did make money on this one because this one tapped into it and we pushed all the way up, and we eventually came all the way back up. We just missed 8-1, so I'm still floating in this trade here. But it is okay. It happens sometimes. It just takes a little bit longer to push up into our overall level. So just got to be patient. So in this case, this trade was a break even. I didn't take any partials, so I can't count that as a win. But this one I'm currently floating in, and we are currently in right now 2%. Let's call 2.1. So 1 to 2.1, I will write down 2.1. All right, so that is that one. Next trade. This one was New Zealand Cad. That was the entry. And I will go over all the trades that we've talked about within our daily market breakdown videos that we send out, within our Smart Money Sundays videos that we send out, and our morning New York session analysis videos that we do send out as well. I'm just going to go through all the ones that I currently have posted here, and then the ones within the videos that I didn't post because obviously they're in the videos. I will go over those at a separate time later in this video as well. Next one, Aud Chef. So you can see the analysis here. We wanted to push up into that level and then I fall. So if I go to it, Nzd Swiss Franc, we can see that we did, yep, right in here, sorry. We did hit up into it, right? We had distribution, higher high, higher low, higher high, very discrete higher highs, higher lows. That's why we need to look for divergence. And I can even show you what that looks like. So when you're coming up into an area of interest, this was an area, I'll show you real quick. This was an area of supply. Okay, we are bearish. We're looking for this overall pullback for a continuation lower. We came into supply. We're not just going to sell it from this level because we have a lot of imbalance here, a lot of imbalance here that we could pull back up into, right? We're not in premium price. This would be a premium price. We don't want to be selling at discount unless we get confirmation. So we had the reaction. That's what we wanted to see. The initial supply level, we wanted to wait for the reaction. So when you go down to the 15-minute, and obviously, guys, I look at every time frame. So when I say 15-minute, please don't ask me why I look at the 15-minute. It just looks pretty right here, right? It looks visible. I can even go to the 10-minute and show you. It looks the exact same. I just chose the 15 just because I'm trying to give you guys a good picture. I look at every time frame. So there's no particular time frame I trade off of. I trade off of any time frame that has proper confluence, liquidity, everything that looks the same. Because everything is the same, guys. It's all fractal. So if there's a setup on the 1 minute, it's not obvious on the 1 hour because you have to scale in. If there's a setup on the 1 hour, it's probably not obvious on the 15-minute. It's probably not obvious on the 4 hour, but there's always setups, usually. And we can find those just by flicking through the time frames. Obviously, if there's no setup, there's no setup, so we don't force anything. We don't want to do that, but you get my point. Anyways, indicators. VFI, this is what I use, volume flow indicator, UTS. Okay, and in this case, actually, maybe there was divergence on a lower time frame. In this case, I don't think there was here. No, there wasn't. Price and volume was increasing, so maybe there wasn't. I was mistaken. But again, that just goes to show you don't always need divergence for a break of structure. It just happens to be a good confluence, a good confluence to have. But in this case, I guess there wasn't. But anyways, we reacted off of the level of supply to the left, and we fell. Higher high, higher low, higher high, higher low reaction off the demand, failed to make the higher high and the lower low. So we formed that lower low. We sold off. So now this becomes the new supply level, right? We didn't fill that yet. We didn't pull back up into it. We have imbalance in here as well. We create descending liquidity. We push up into it. We pushed up a little bit higher. We actually came into a deeper supply, but we can see we didn't hit our stop loss. That's why our stop's above the high. Okay, so the 23 pip stop loss. And we ended up getting, pushing back to the downside. The reason why I only had a 1 to 3 on this and I took it just to the low here was because technically we are still in an uptrend, counter trend, high, low, high, low, high, low, high, low. Could have been a higher high. That's why it was a little risky, but I got the trade. It worked out for me. Just wanted to take out previous liquidity and get out just in case we rolled back to the upside. But had my confluences, which is why I took the trade. So 1 to 2, or excuse me, 1 to 3, that is a 3% gain. Next one. Let's go over the next one. Where is the next one? Chef JPY. All right, we have the analysis. We can see the box in which we're looking to play off of. We can see the clear liquidity run, buy to sell. We can see the direction in which we're going. We cleared the low here. We have ascending liquidity here. So we're looking to push up into that level, mitigate that level, and take sell side liquidity. That's the setup. So what was that? Chef JPY. There we go. Perfect. That's exactly what happened. This was, again, a little bit of a risky trade because technically we are in a higher time frame uptrend. Higher high, higher low, higher high, higher low. We were expecting a higher high, but it had all the confluence to short it, so I did take a little bit of risk. We can see that we had equal highs. We had a clear buy to sell, 8 in the morning Eastern Standard Time. So prime London, New York session changeover, manipulation, perfect time and price. We broke and closed below the previous swing point, made that lower low, pulled back, generated liquidity. Not all the time do we come up and mitigate immediately. Usually we generate liquidity. You can see the relatively equal highs, ascending liquidity there. Then at the perfect time of day, 9 in the morning the following day, we had that mitigation occur. We had the drawn liquidity here, these equal lows to come attack next. We mitigated, we filled the imbalance, the T, 142.5650, and we did sell it all the way down. The reason why I didn't have a huge take profit, and this was only 3.8% return, was because higher time frame we're bullish. So if I go to the 4-hour, we can see the sensitivity revolving around this region of price here. Look at this. Resistance, support, support, resistance, 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 broke above it, wanted to retest. As support, we had a little bit of a break, a little bit of a push to the upside. So this could be an area of interest where you could have taken a trade when we broke and made the lower low. Just continuation with the lower time frame trend, because we can see here that this candlestick, when we snag liquidity, we retraced a little bit. Probably because we freed up a lot of liquidity, that's why it pushed back up. But the momentum and the sellers were still in control, pushing to the downside, coming into this sensitive region of price around 140.5, which is where I had my take profit. We started to reverse, so we got out at the perfect time. We filled the imbalance here that we came into, filled that imbalance, and then we fell back to the downside. So now this once was demand, now it turns supply, which is why if you have the trade this morning from the mitigation in the lower time frame lower time frame trend here, you would have gotten a nice wick entry, right? So that happened at 9 in the morning. Time and price. Guys, this happens all the time. If you know what to look for, if you know what you're doing, there is so much money to be made in this market, period. Okay? Continuing. That is Chef JPY. Next. Let's go to the next one. I think we had 2 in a row that were losers, each on half risk because they were the same correlation. They correlated well. Nzd Cad and Aud Cad, which is, oops, there it is, Aud Cad. So I'll show you what we were looking at on the charts. Let's look at Nzd Cad. So right in, let's go to the lower time frame. Right in here, this was the trade, I believe. 15-minute. We can see that we reacted off of demand. We made that higher high. We reacted off the demand here, right? We pushed down into it, and then we had a lower time frame break of structure. So this gave me somewhat of confluence to get in. You can see accumulation that occurred, and we broke the counter trend structure. Maybe this is on the 10-minute. Trying to get a clear picture. Let's try 15. Nope, 10-minute. Okay, so this one was on the 10-minute. Aud Cad was on 15, I believe. Well, anyways, we broke the counter trend structure here. We closed above it. So I was just wanting a simple retest continuation just in case, we reacted off the demand over here in the correct direction of trend. We had all these other trades, but, it just happened to lose. So, we came back down, went into drawdown, little profit, and then hit our stop loss. So this was minus 0.5%. And the other one, it was again minus 0.5% because it was very correlated. We want to understand risk during these correlated pairs if we're trading both of them. So sort of the same deal here. If I just zoom out, we can see that we came into this level higher high, right? We created a pullback, higher time frame, right? Higher high, higher low. Within the mini trend, higher high, higher low, higher high, higher low. This came into demand, sell to buy. This became the new demand right here. Push down into it. snag liquidity, sell to buy, reprice, continue, higher high. So again, we just want to pull back into demand, and we can see that we swept all this liquidity. Look how much liquidity is resting below these lows. We push down into it, sell to buy, right? Perfect. And I believe 15-minute time frame showed it well. Yep, we accumulated discrete lower lows, lower highs, had that last sell to buy. It's happened at 6 in the morning. This is still London time. Pushed up, made the higher high. We pulled back into the level perfectly, had a little bit of a reaction, and then we ended up falling back to the downside. And with news, we just totally took that out and created equal low. So unfortunate. It happens sometimes, and because we were trading NCAD and ACAD at the same time, pretty much the same setup, we just wanted to risk 0.5% just in case both lost. In this case, they did, so we only lost 1%. All right, continuing. Had a daily market breakdown video, awesome. Discussed on Monday's daily market breakdown video. Remember live session in 1 hour. Okay, so that was just an update. So discussed on Monday's daily market breakdown video. This level right in here was discussed. So we have the entry, and I'm going to show you how precise these stop losses need to be for you not to lose trades. Gbp USD. So there were tons of trades taken within here. Demand, equal lows, fake breakout, snag, sell to buy, right time of day, breaking counter trend structure, equal lows right in here, shoulder, head, shoulder, fake out, entice the sellers, the retail traders, nope, mitigate the demand, push right back to the upside, take retail trader stop losses, create new demand here, higher high, pull back into demand, higher high again, formulate new demand. So we're creating so many more demand zones. Equal lows in here. We push down. This is our last sell to buy region that mitigated this level of demand. We have not come up into our higher time frame zone of interest, which is 1.21. The reason why I have 1.21, we look at the 4-hour time frame. You know, this is just a level of imbalance. It's a level of supply. It's also a psych level. I figured, okay, we might see a reaction from the level here, so I'm just going to take profit there. Overall, our take profit was right here because of the higher time frame imbalance, and we can see that we had our overall lower low, lower high distribution, lower low. So this was the last swing point in which we made this low. So continuing with trend, having a deeper pullback for a more continuation to the downside. These imbalance move here, just straight selling volume. However, we reacted off the level. We had an entry here. I'll go over that in a little bit. But our overall target is 1.2430 back up into our higher time frame supply. But that was a good target if we were to be buying in here, which we did. But we had that 1.21 level, so I was a little nervous. I'm like, oh, we could react off that. So I decided to take the trade up into 1.21. So nonetheless, had a great entry. Where was our stop loss? Why did we play stop where we do? Why did it not hit our stop? Even with the spread, ladies and gentlemen, it did not hit it. This was 3 pips. The spread was, I think, at the time, 1.5 or 2. It was very tight. Why? Because we're trading at the right time of day. All right, not during Asian session where the spreads could be ridiculous. Not during daily closure where the spreads could be absurd. During the right time of day. This is why it's important to understand every little detail about your trades, or you will not be profitable, I promise. So, and that is why we're here to help. So anyways, demand, push down into it, almost stopped me out, but lucky enough, we put stop right below the low here. Perfect placement, and we rallied to the upside, hitting our take profit. So at this point, I'm not sure why I have that. Maybe it was just to show the overall level. But anyways, this one was I believe it was a 1 to 3. Yeah, 1 to 3.06. I'll just call it a 1 to 3. All right. So we will write that down. 1 to 3 for shits and giggles. I think that's what we had anyways. All right, let's go to the next one. We're just continuing here. Guys, we're giving you all of these out. VIP gets all of this stuff, so I can't make this stuff up. How can I be lying when I'm giving you guys exact entries? Well, in this case, this one lost, but you know what I mean. These exact areas before they even pop up. So it's not like I'm just faking the entries here. All right, continuing. Nzd USD. So this one was a loser. I'm going to go over why. Nzd USD. I'll highlight them in red so we know where they are. All right, so the reason why I thought this was going short was because $1 was still strong during this time. And I thought the news would be the catalyst to push this lower. We had a liquidity run. This high here came up into supply very perfectly. This last point of supply right in here that was unmitigated. And we had a reaction. We failed to make the higher high, and we actually made a lower low. And so, we technically didn't break structure. I know I saw this. I just was stupid enough to still place the trade. Higher high, higher low. This low produced this high, so technically this is still the range. Technically, I shouldn't have taken this trade because this did respect structure, and we did push back up when price pulled back. So this was already invalidated before I even entered, but I was dumb enough to place it. Sometimes even I do make mistakes too, guys. So I did take this trade 0.5% on each because there were two positions. I ended up losing this, and we pushed to the upside, but was able to recover with this trade. I'll go over it in a little while. So that was a total of a 1% loss there. The next one I did not post, but it was talked about for a long time. I lost both of them on half risk because they were both Euro AUD, 8 Euro Nzd, so correlated pairs. I've been wanting these levels for quite some time now. All right, we can see here equal lows. I'm going to try not to repeat myself too much because I've been talking about Euro Nzd forever. We had a beautiful entry here at 1.63. Beautiful entry. I love this analysis. If you guys don't, I know this is clustered, but go watch the video on Euro Nzd. I forget what the title of the video was, but I know I created a video just on EN that was discussed right in here because it was all the smart money confluences you can think of. Anyways, I wanted price to come back down to fill in balance at 1.63 cycle level below these equal lows. And see this sell to buy candle? This was the one that mitigated this candle here that swept liquidity. And this was where we had our original entry. So I wanted price to come back down, fill that imbalance, and go long again because we haven't hit that higher time frame level yet. We can see that we did have a reaction. See that low there? The low was 1.62988. And you can see it up here, right? The low here. I'm going to put my cursor to that candle, and you can see above 1.62988. So we did come into it very nicely. We had the reaction. I was waiting for an hourly closure above in order to, move my stops to break even and everything. We wicked it, and then we started to push down. I'm like, darn, we could easily come down lower, maybe take the liquidity. These are relatively equal lows, but overall we still should be going bullish here or long because we had a lower time frame area of demand in here as well, which we did react off of over to the right. And, we had the reaction, but we just continued lower. Same thing goes for Euro AUD. It's pretty much the same exact type of trade, and we just lost the trade there. So I'm going to take responsibility for that. Minus 1% total, 0.5% each. All right, next, let's continue to go through here. So this was just an update on the Swiss franc Japanese yen trade. Perfect. Continuation. Euro JPY. This was discussed. Yep, EJ has discussed what spoken on the daily market breakdown video and the live session we had on Wednesday. So even if you are not in VIP, guys, take advantage of these live sessions. We do them only once a week, but they're so valuable. We go over everything we're looking at, and we give you guys stuff to look at for the remainder of the week. I highly recommend you hop on those live sessions. If you are, congrats. You guys are killing it. If not, I highly recommend you do it if you have the time. If you don't, it's okay. The recordings are always posted to the Trading Up community channel, YouTube channel, afterwards. But obviously, those of you who are in VIP get these daily market breakdown videos every day, highlighting what we've seen. So you already had this analysis to begin with. We had two levels on EJ, one here and then one up here. I'll go over those now. Euro JPY. All right, let's do it. So originally, we wanted this level in here. We can see the imbalance between this wick and this wick. That's why I have the blue box. So technically, we're still in a downtrend. Lower low, lower high, lower low, lower high, lower low, lower high. Breaking counter trend structure. High, low, low, failed to make the higher high, lower low. This becomes our new supply level. We had the imbalance. I wanted price to pull back. We ended up not, but oh well, we had another entry here. I'll go over in a second. But wanted that entry. We wanted to come down and take out this low because technically we did not come into this daily time frame area of demand. Look at this. Liquidity run, sell to buy, chop, 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 push, expansion. Demand, we have not come into it. This low did not tap into it. It looks like it, but it didn't. It has to come into it before it's valid. It missed by a few pips. Doesn't matter. Didn't come into it. Probably why we came back down into it now. So when we were trading in here, I was like, okay, well, we have two potential levels. One at the most recent swing point to continue with, just the lower time frame trend, lower low, lower high, lower low, lower high, lower low, lower high, continuation. Or if we had the overall pullback, this is why I tell you the difference between a pullback and a break of structure. Since we're bearish, this would not be a break of structure. This would just be an overall pullback in the market for a swing down. Lower low, lower high, lower low. Get it? That's why it's fractal. You have to understand the difference. So, beautiful entry to the exact pip, got the fill, 139.5, imbalance fill to the T, psychological level, stops above the high. You could have put it above this high, gotten you a lot better risk to reward, but I decided not to. I could have doubled my risk to reward, but oh well. I'm more of a conservative trader anyways. But anyways, if we go down to the lower time frame, let's go down maybe to like the 7 minute. I don't even know. I'm just looking. I'm flipping through. All right, we can see this here. High, low, high, low, high, low. Failed to make the higher high here. Lower low is formed. So the counter trend here is over. We pulled back and we continued lower, creating descending liquidity. And we finally had that last run, sweeping all this liquidity, filling the imbalance here to the exact pip. And then we rallied to the downside again. So this is your confluence. And this is why we had that entry where we did. We also had the imbalance that was formed here with that double doji formation. Just provided us with a better, more precise and higher probability chance that this was going to work out. It did. 1 to 5.17. I'll just call it 1 to 5.1, just so I don't overshoot myself here. Okay, we can see the high of this. See the high of this wick here. You can see it up here where it says high. It'll say high 139.507. We had our entry at 139.5, so we had about 7 pipettes of drawdown, less than a pip. Too precise, guys. Too precise. What can I say? Continuing. U.S. dollar, Japanese yen. We wanted pullbacks back up into our 2 levels. We'll go over those now. I think this was the one that we did not get. Yeah, we didn't get it. We didn't quite get the pullback back up into here or here. I'm going to go over what's going on in here because we did take 2 trades in here. But we wanted 2 levels, I believe. Yep, 1 here and then 1 at this, I think, 7-minute time frame. Yep, 7-minute time frame, buy to sell, swept liquidity coming into supply and a higher time frame supply right in here. We had those entries, but I'll go over those in a minute. Didn't get that entry. Now it's all the way down here. This is now invalid. We can delete this. It is now not invalid anymore. To pull back all the way up in here, if we did, I'd be surprised. But if we got back up into that premium price, it may be valid. I would just have to look for possible reaction. And you know what I'll do is I'll keep this level here. I'll keep that just in case we do have reactions from it, because technically it's not something like this to where we reacted off demand and now it flipped to supply. This one actually did, because we can see high, low, high, low, high, low. This was once demand. Well, really, it's not easily able to see. You can see here demand, reaction, fail, invalidation, pullback, mitigate, continue, imbalance. So this is kind of still valid a little bit, but we'll see. I doubt we'll get a big pullback at all. We're just terribly bearish right now, as expected, because this is our higher time frame level that we've been talking about for weeks and weeks now. So we've had so many buy trades in here. It was incredible how many buy trades we had, targeting 138.5, which is, I think, right there. Yeah. So, all right. So that's UJ. No longer valid. No trade in that regard. Next, I think it's sort of the same deal. Oh no, where's the next one? UJ. Oh, I didn't go over this one. Aud Nzd. Huh, somehow I didn't write that down. I forgot to. Okay, well, anyways, we can go over it. Aud Nzd, yeah, see, we haven't hit those levels yet. Right? Well, they're still valid, but we haven't hit them yet. This was our higher time frame level, as discussed before. Remember the 2018 high that we came into all the way to the left, 1.1175. Objective has been met, and we're looking at breaking structures at the downside, so it wants sells from these 2 levels. It's still valid, just hasn't come up and hit it yet. What's the next one? EJ. All right, this is our EJ setup, and again, this one, again, was invalidated. It was right in here. All right, so we had the reaction, we had the break of structure, we had the pullback, we had the imbalance fill, sort of, kind of a deep basis, just that low. But I figured now in here we could pull back, fill up that imbalance here, tap into the lower time frame swing point, continue. And I said that this would be the level in which is the higher time frame objective. If we come into here before pulling back, the sells from here are now invalid because we already hit the objective. So that's another thing to understand. How to distinguish when a setup is valid versus invalid. You have to understand higher time frame objectives. I think that might have been a video on our YouTube somewhere. If you guys want to check it out, you can find it. So that's EuroJPY, so nothing there. Continuing. Canadian Swiss franc. This one was interesting. We haven't hit this yet, but this is still a valid trade. You guys can potentially take this next week. We'll take a look at it. Cad Swiss franc. All right. So higher time frame. We are bearish, right? We have these equal lows, 1, 2, 3 touches of the trend line. How many people do you think are buying in here? So many people. Retail, stop losses below the low. We need to go snag those stops because retail sucks. Gosh, I love saying that. It's so fun. Retail, terrible. Anyways, demand, imbalance, higher high, higher low, last point of return before breaking structure counter trend, higher time frame. Higher high was formed. We want that overall pullback before potentially continuing long. So 1 hour time frame. We are now in this pullback phase. We're making lower lows, lower highs. That's kind of obvious. Right in here, supply level. We pushed up. Didn't take this trade in here just because it was just a huge level, and I wanted to wait for more confirmation, and we didn't get any confirmation in here. Even if I did sell it, I still would have made money because my stop would have been above the zone, but I didn't, so can't take credit for it, unfortunately. Now, continuing. So, 15-minute time frame. Excuse me. We made the lower low here. We have descending liquidity. We had our last run, buy to sell. We make that lower low. Now we can confirm the sells from this level. So now this level has been held. We pushed up into our last point of supply. Higher high, higher low, higher high, higher low. Reaction off of demand. Failed to make the higher high, lower low, flips to supply. That's exactly why we react here, guys. If you want more precise entries, understand supply and demand flips. I have a video of it on YouTube. Just look for the title. We fall. Okay, now what? How do I know? I looked at this chart right here, and I knew exactly where price would probably push up into. We haven't reached it yet, but doesn't mean we can't. I think we still can. We have relatively equal highs here between this high and this high. Okay, let me just make it pretty for you all. The high is 668, and we can see we haven't pushed up into it yet. So equal highs. Perfect. We'll wait for that next week. How did I know this was a valid region right in here? Why this wick? Because look at where we broke the structure. Descending liquidity, higher high, higher low, higher high, higher low. What is a wick? It's selling and buying at the same time. That's why we closed right there. So there must be a sell to buy within this. This means a reaction in here from the demand in which it failed to make a higher high. We rolled over, made that lower low. Let's check it out. Happened to be on the 6-minute time frame. Perfect buy to sell. Failed to make that higher high. We made the lower low. We have imbalance here as well. 74850. Really wanted that pullback. We just continued lower, but we are still valid because when we have equal highs here, we have this level and we have the higher time frame draw on liquidity. These lows. We also have these lows, so just even more conviction that we will go short. But overall, higher time frame, there's a lot of liquidity resting above all these highs. So eventually, hopefully we'll get into these levels first, but eventually we will go along and snag that buy side liquidity when we finally restructure ourselves to the upside. All right, so Cad Chef, no entry on that one. I think the next one may be, this is 80 Swiss francs. So this was a new one. And this one, yet again, has not hit because a lot of these were talked about either yesterday or this morning. And it hasn't hit yet. 80 Swiss franc, zoom in. I have 2 levels here. Remember we had the first entry here, the hit take profit? Well, we created a new supply because we pushed up into this supply in which we distributed. Remember we talked about that? And we failed to break the structure to the upside. We failed to make that higher high. We made the lower low. You can easily see it here. So now this invalidates the demand in here, and now it becomes supply. We have imbalance. Perfectly seen imbalance. I was hoping we'd get back up into it. We never did. But that is what creates the supply. So this would not be a break of structure. If we pushed up into it, it would not be a break. It would simply be a liquidity run because technically this high created this low. So this is the range. It would just be an overall pullback. Remember we discussed that a few minutes ago? That's how we can tell the difference. So I have 2 levels. I'm not sure why I have this one. Maybe it was like a 20-minute Yeah, it's with 20-minute. We can see this morning at London session, 3 o'clock, 3:20 a.m. Eastern time, so London open. We can see we ran this high here and this high here, buy to sell, continuation. So even if we open on Sunday and we just kind of chop around, maybe Monday morning, run up into it and fall, just for the continuation with the lower time frame structure, still a possibility. We have the imbalance. The imbalance between this wick and this wick is lines perfectly with the sponsored move. This is the sponsored movement, and we have relatively equal highs in here, so that could act as the draw on liquidity. All right, guys, if you're not understanding this, go back and watch this video again. I know I talk fast, there's just a lot to go through, but if you're thinking to yourself, how in the world does this guy know all of these levels? It's because I've been doing it for so long, and I'm not trying to sit here and brag. I'm just telling you, like, if you're not there yet, it is okay. I totally get it. I was once in your shoes too. If you're, as long as you're progressing and never getting up or never giving up, you're on the right track. This has taken me years to master, even though I haven't really mastered it. I'm always learning. But where I am was because of, what I put into it and the amount of experience I have. So if you're not quite there, it is okay. Let me help you. I will help you get there, as long as you have the patience and you want to help yourself as well. Anyways, continuing. That was Aud Chef. Let's just continue to the next one. Morning breakdown video. Love those. Love sending those out. GJ. I don't even want to talk about this one. This one, there's not too much to talk about. I can just show you. Yeah, I'm going to save this one for later. There's really not much to talk about here. We can see it never came back up and hit it. We just rallied to the downside. Sort of the same deal with all those other pairs I talked about. So never pulled back up into it. No trade. Next one. And it is invalid, by the way. NJ. Same thing with NJ. I'll just prove it to you. NJ never pulled back up into it. Was hoping it would. Just missed it this morning. We rallied to the downside as expected. But, oh well, didn't hit it. Invalid now. Okay. Now, Nzd Chef, that was this. Oh, excuse me. Excuse me, guys, just burped. This was the sponsored move during the news, and then we pulled back down into it, sweeping liquidity. The reason why I did not give you a before picture is because it was discussed during one of the morning breakdowns or one of the daily market breakdown videos. And that's why I said nice reaction so far from our level. Same here on G-Staff, had a reaction there. Both of them happened to be break-even trades. I didn't even take full risk on them anyways. We can see here, let's go to a lower time frame. Yeah, 15-minute. We rallied back to the upside. I did go break even on them because we made a high. We failed to make a lower low. We made a higher high. So I thought, okay, it's probably good to go to break even on them. I didn't take partials though because technically this is still the range, and I wanted to wait for a break of the structure first to confirm that we were going long. I thought that because we failed to make the lower low here, we made a higher high, that it was good to stop to break even just to save me some risk. But I didn't take partials because we technically could have come a little bit lower, respected structure even down into here, and made our move. So wanted to take partials at an appropriate time. Unfortunately, it just didn't work. Hit break even. Same thing with NChef. Same thing with NChef. Huge, massive push. Just kept rallying. So I'm like, all right, well, let's just put stop to break even. It's Friday. I don't want to lose money on this. It ended up falling, so I got lucky. It actually did fall. But I didn't make any money, but I didn't lose any money, so that's good. Continuing here. Euro USD. Alrighty. So I won one and I lost one. So we can see here 1.0150. This was our current original level, and you'll see later on in this video that all of these XXX USD pairs were spoken of on our daily market breakdown or a morning breakdown video because I didn't have a before picture like you saw in the other examples, but they're very similar in their format, in their setup. And you VIP members can attest to it. I said it before. The price even came down into it. But anyways, I'll go over both. Euro USD. Let's see. All right, perfect. So the reason why we're looking to long is because technically we're in the counter trend phase here. We're in this pullback phase. We want to come back up and retest prior market structure. Remember, before we were looking at sweeping higher time frame liquidity back from 2017. remember we had all these trades in here, VIP. Remember all these trades in here we took, and we finally rallied down and we hit that level. We hit our take profit. Now we're looking at potentially, since we're buying, potentially retesting that same level. Our daily time frame EMA is coming into confluence. Doesn't mean we're going to short it here. It just means that since we're counter trend bullish now, because we've broken structure back to the upside on the counter trend, because see we've closed above this previous swing point. Now we're bullish counter trend. This would be a nice target for any longs that we do incur. So we push back down, retest where we broke in this demand. We snagged these equal lows. And then we can see here we took these equal lows here as well. I'll just go to the 15-minute. Equal lows were snagged, sell to buy. And then on the 7-minute time frame, we can see here that we had that sell to buy from FOMC. So that would have been the imbalance fill and the mitigation. We did come a little bit lower than expected, but stops were right below the low where we formed the sell to buy. And we ended up rallying to the upside. And we can see that we still are in this at the current moment. So our targets are 1.0340. And we are currently floating right as of now 1 to 1.72. So I'm going to call it 1.17. Or I don't know why I said 1.17. 1.7. All right. And then we did hedge ourselves because technically we did respect the supply. We respected the supply right in here. We can see here that we pushed up this high here, filled this imbalance pretty much to the T. We fell. We pushed up again. This high here swept this high, swept the liquidity, pushed down, failed to make the higher high, and made the lower low, which is why we respected it so well. We pushed back up, retested this supply in here, fell, pushed back up, retested this supply right here, this last buy to sell. You can see the clear mitigation right there, and then we fell to the downside again, forming this supply level. And we can see here that after we had the reaction from our level here, we didn't make a higher high. So I was a little concerned about that, but that's okay. You know, sometimes we can hedge our positions. We pushed up, mitigated the supply, pushed it back up one more time, fell, failed to make the higher high here with this push to the upside, and we made the lower low. So I figured, okay, well, we have the buy. We're in profit on the buy here. Couldn't hurt to hedge ourselves just in case we do fall to the downside. We lose on the sells, we win on the buys. Overall, with risk to reward, we would make money, right? So I hedged myself, and I did lose this trade. So I did lose 1%. It's okay. So technically, as it currently stands between this trade here, this winner, and this loser, well, this floating winner, I'm net 0.7% return because I'm up 1.7 on this so far, and I lost 1%. All right, next one. Let's continue. AJ, sort of similar to all the EJs, this CADJs, the GJs that I just discussed. It never fully pulled back enough. I'll even just show you just to prove it. Yep, there we go. Swept a lot of liquidity, coming up deeper into the supply lower time frame, and we filled daily time frame imbalance right in here. Our targets are these two levels, 91 psych level and 90.656, which is this demand level here. Overall demand where we snag liquidity. This is just sell side liquidity. We should come and run that liquidity here into our real level, which is why I'm looking to sell. So when we did get that break of counter trend structure, we can see the liquidity run, buy to sell, snagged all this liquidity here and here, pushed down, reacted off demand, failed to make the higher high, lower low, which is why I wanted to take it off that. Unfortunately, we didn't get the pullback. This is still valid, though, I would say. If we get the pullback next week, I would be looking to sell at that level around 94.57. So no trade. Next one, let's go over what we have. AJ, this was the same thing. It's just a higher time frame view on AUD/JPY, as you can see. And then right in here, AU played out as discussed in yesterday's daily market breakdown video. Okay, so the rest of these trades, I believe, were discussed on daily market breakdown videos or Smart Money Sundays or whatever video we sent out. So I'm just going to go over the rest here. And yeah, we have EG. We have another. Yeah, I'll go over those in a minute. So AU, we had two levels. One from here, one from here. All right, we see this. Now I'm going to go to the charts. AU. All right. So we had two levels here. Well, really, we had this level here too. I discussed this on a breakdown video. This was the demand. We can see that the sell, sweep liquidity, reaction off demand in here, higher high, higher low, higher high, higher low, maintain structure, right? Sell to buy, reprice, continue. That's demand. We formed equal lows. We pushed down, didn't quite tap into it. We finally tapped into it today, which is why we had that rally. I'll go over these trades in a minute, though. What we can see here, 7-minute time frame was the start of this demand, sell to buy, and the 50% between this wick and this wick, just in case, we only hit the 50%, which is exactly what we did before we rallied, because oftentimes when we have these huge pushes, we don't always fill the entirety of the imbalance right away. We oftentimes hit that mean threshold. 50% also is perfectly aligned. If I just move my cursor slowly to the left, aligned perfectly with that high, previous market structure, 69575. We reacted and then we went long. I did take partials because we did sweep this high here. I did take on 1% risk a third of my position off the table, and then I moved south to break even. Did come down, hit me break even, so I made 0.33%. So I will write that down there, 0.33. All right, and then the next one I had right in here, sell to buy. The reason why I didn't place my stop below this low, normally I would have. Normally I teach my students, place your stop below the sponsored move. I didn't do that because we have a level of demand as described right in here. Remember, I just went over that. The repricing event that occurred higher time frame when we initially took liquidity, sell to buy, reprice, continue. That's the reason I didn't place my stop right below the low. I extended my risk a little bit and placed it right below this low here. All right, so that's why when we pushed down into it, didn't take my stop. You can see here, didn't take the stop, and we actually got in another trade to the exact pip. Literally, to the exact pip I got the fill. See on my IG story as well. So in this case, this is break even. And this one right here, I think it's over here, yeah, right there. We're currently floating, let's call it right there, 0.9%. And this one right here, we're currently floating 2.32, so 2.3%. So I think what, 2.3 plus 0.9 is 3.2. Let's total it up, 3.2%. All right, so those are our trades so far. Next, Euro GBP. All right, so this is interesting. This is a really good setup. It was a counter trend trade setup, but I loved it. Perfect aerial effect setup. We can see we made the lower low, the lower high. We pulled back. We ended up filling in balance, and we pushed up. And right in here, this was Asian session. Right, I'm actually going to show you the charts. It's a lot easier. EG. Yeah, perfect. All right, so we're still creating lower lows, lower highs. Lower low, lower high, lower low, lower high. We didn't make the lower low, and we actually made the higher high, which is why we took the trade off the pullback for continuations, but also more confluence in here. I'll show you. We filled the imbalance. Here we had equal lows. This is all Asian session. During London session, 2 in the morning and 2:15 in the morning. New York session open just about. Buy. Entice the breakout buyers. We closed above the Asian session high, which is right here. Entice the buyers, fake them out, push right back down, take their stop loss. Entice the Asian range sellers, break out, take their stops when we push back to the upside. So we're faking them out here, moving in the right direction. Create that higher high, break the counter trend structure, and then we have a lot of imbalance up in here to take, and then we want to come back up into our higher time frame level of supply. This is just imbalance fill, deeper retracement. This is really where we retested this supply level in which we created, lower low, lower high, lower low, right? So we have more room to go to the downside. Higher time frame levels in here. We can see that we came into imbalance, which is where we broke structure initially. We were bearish, low, high, low, high, low, high, low, higher high. Equal lows were taken, sell to buy, which is why we stopped right here. Filled imbalance, continued long. We have this push up, push back down, filled imbalance here. This is the start of the imbalance move when we just continued. So I want 83279 to be filled overall. Okay, we haven't come into that yet, but we're still looking to buy. 15-minute time frame, right in here. So this becomes our interested level, right? This was manipulation during London session. We sweep all of this liquidity, ascending liquidity we're building. Boom, sell, boom, buy back up. Mitigate, stops below the low. We didn't get hit out. It just came deeper into this level. It's okay. Sometimes it happens. Came deeper than what was expected, but we rallied to the upside. And then we have, this candle here when price closed at 5 o'clock Eastern time. So I'm not even going to look how much we're up in profit. Probably very minimal. I'll just say we're around break even. All right. So 0% on that one so far. Next one, Euro USD. So when we lost the hedge sell, remember I told you we lost that hedge sell, we pushed up and we broke the structure. Now we can come back down and clearly assume that this demand is going to be respected because we respected this demand that came into this demand here that swept the liquidity that came into this higher time frame demand. You guys see how this stuff is working out? You guys love this? You guys absolutely love this strategy because it works. It's the actual why behind the market movements. It's the exact why, right? It's not just a trend line. Well, what's a trend line? Who knows? It's nothing. It's bullshit. What is liquidity? That's how the markets move. Someone's got to make money. The big banks are controlling price. They got to make money somehow. They understand where liquidity is. They go grab it. Sell to buy to sell. All this stuff. So much that goes into this, guys. This is why it works. So we ended up losing this one, but we created equal highs, draw on liquidity. Okay. Sell, buy, sell, reaction off the demand. Open to the demand right here, had a little bit of drawdown, but it's okay. Stops are below this low here. This is where we initially sold and rallied. So we are up currently 1.27. Let's call it 1.2. Okay, 1.2%. And now we're looking to just continue long. Maybe we come back down into this demand here. Potential re-entry. Hint, potential re-entry. There we go. Continuing. GCAD. This right here and this is the same. It's just this one's marked up. We had the run on liquidity. We made a low. We failed to make a high. We made a lower low. So I want an overall pullback. We have sell side liquidity here. We have equal lows. And we have two unmitigated higher time frame demands because we are bullish. So I want to continue with the overall structure, which is bullish. So I want to be buying at discount. Perfect demand levels, but I wanted a little bit pullback because now I guess we can kind of say we're counter trend bearish. So what's that, GCAD? Yep, right in here. And we kind of created more lows. Didn't take out these lows yet. We're overall bullish. Higher time frame. I can see, I know it's blurry, I'm just zoomed out. Accumulation, perfect accumulation. Oh my gosh, is that beautiful. Closed above prior market structure. Now we're in this pullback phase, higher time frame. This is why we're looking to buy at these two levels, because this level here didn't come and fill this imbalance, and we didn't hit this demand. So that's why we have two POIs, equal lows below that. So I want price to push lower. This is why I'm looking to sell it. But just ultimately push lower into our levels to buy back up into our higher time frame supply levels, because we did come into a higher time frame area of interest here, which is why we're reacting to the upside right now. We did come into that level, filled in balance on the daily time frame back in 2013, took out this liquidity here. We can see this low was swept by these two lows by a few pips, which is why we pushed up and failed to make that lower low, which is why then we expanded and then ultimately just kind of just moved. So we're finally coming back down to test that. We swept all this liquidity higher time frame. So we're now finally trying to get some relief on this, but I'm still wanting to sell this counter trend because we have a nice setup, as just described. But we're just floating around break even now, so can't really say much about it. All right. I would like to see price open on Sunday and just fall, but who knows? We may run the high. I may lose a little bit. Oh well, I'm still up tons this past few months, so I'll be okay. That's Gbp Cad. Next one, I think, is Eurocad. Yeah, that was what we just talked about. Eurocad. Yep, Eurocad. Same sort of deal. Same looking setup. All right, where are we? Yep, Eurocad. Alrighty, and we pushed up into supply. That pushed up into this supply here, filled that imbalance perfectly. We're still technically bearish. We have higher time frame liquidity to run. We can see that this low didn't take out this low, which is why I'm still looking to sell. We snagged liquidity this morning, buy to sell, broke the counter trend, wanted to pull back. We can see the 15-minute demand here. Supply, because we see higher high, higher low, higher high, higher low, higher high, into higher time frame level. Higher low, failed to make that higher high, lower low, right? So we want to pull back into that one. This was once demand, now supply, pull back up into it and fall, sitting around break even, so I'm not going to really count that. Alrighty. This one was the reaction from EU, which is now up here now. Yep, we can see that level. AUD USD, as discussed before. This was Nzd USD, same sort of deal, and GBP USD, same sort of deal. I'll quickly go over NU and GU. Those were 2 wins a pop. I did risk 0.5% on each, just being transparent. I did not risk 1% on each of these because they're the same trade, essentially, just 2 different levels. So 0.5% on each. We can see very similar setup to all the other XXX USD pairs. We swept liquidity, 7-minute time frame. We have imbalance. We have this sell to buy, right? Imbalance fill, institutionally sponsored. This 50% of the imbalance from this wick to this wick lines up perfectly. 0.6230. That is a psychological level. If I go to the hourly and do the higher time frame imbalance, we can see if I pull a wick, fib from this wick here, because we had selling volume. So between that wick and this wick down here, right here, between that wick and that wick, 50% lines up with it again. Perfect confluence. That's probably why we came into it pretty nicely, right? So we did come down, tap into both of these levels, sweeping all this liquidity here, sell to buy, looking for further upside. We can just continue with that because high, low, high, low, high, overall pullback, higher low. This produced the higher high, which is why this is not a break of structure. This is just an overall pullback because this is the range between here and here. So we can pull back as far as we want, as long as we don't break the structure. Then we made the higher high, we pulled back into our 2 levels, and we pushed up to the upside. Higher time frame, 0.64. We have this is not a sponsored move, but this is an unmitigated level. It's not sponsored move because it didn't sweep liquidity, but it's unmitigated. It's imbalance in here. It's also a psychological level. It's also pulling back deeper into premium. If I pull my fib from the high to the low, 61.71. It's also, everything else in here has been filled. We can see the break, push up, failed, lower low, lower high. This high here came into this low, filled the imbalance, pushed down, pushed up, filled the imbalance here, pushed down, pushed up. This did not fill. So that's why I like 6.4. It looks good. All right, that's my target. So let's see where we're at. Currently 1.54, but I risked 0.5%, so currently 0.75% on that one. And now the other one, we are currently up 2.4, so half of that, 1.2. So plus 1.2, that's going to equal 1.95% for those 2 trades. And as I showed you before with GU, very similar. I'm not going to go into it. You guys already know the deal. This is why we entered, imbalance, 50% mean threshold, just in case. Rest right below this liquidity, which we snagged perfectly, and we came back down into our sell to buy region that formed during FOMC news event. So perfect entries, continuing with trend. We're just continuing to buy off of these levels of demand, waiting for liquidity to form, waiting for time of day, waiting for these demand levels in balance zones. Every concept that smart money is about. And we just wait to target these higher time frame levels, which we already discussed, which was this higher time frame level of supply up in here, 1.243, or if we get lucky, higher, 1.247. So let's see where we're at here. In this case, we are currently 1.14. I'll just call it 1%, just makes it easy. Half of that is 0.5. And this one right here is 1.98, so 2%, that's 1. So we're currently up 1.5% on that. So guys, that is everything that I have. These are all the trades that we have been taking within our VIP community over the past 2 weeks. Fully transparent. You guys have seen everything here. I don't leave it out. All of our VIP members know this. The ones that, were already in profit when I had these levels, go back and watch the daily market breakdown videos for those of you in VIP. I talk about them all the time. So it's completely transparent. But guys, if you're interested and you want to take your trading to the next level, you want to do this alongside us every single day, every single week, catching these huge wick entries, this large, massive risk to reward trades, feel free to go to our website, www.arielfxtrading.com, to book a free consultation to see if you are the right fit for our program, but also if we're the right fit for you. So guys, I know if you are not doing so well in your trading or just want that little bit of a boost, if you already have, some experience and just want that boost, feel free to message us. We'll be happy to work with you. We'd love to speak to you about your goals, your financial goals, your trading goals, to see the best possible actionable plan, individualized, personalized plan that we can create for you going forward in your trading so that you can get to this level and do this stuff every single day. So before I go, guys, I'm going to tally up the whole percent return, including all the wins and all the losses, and let's try to get our net result. So I did calculate all the trades that we took. We took 39 total trades the past 2 weeks. 32 of those trades have either been open and closed, meaning we opened and closed the trades in either a win or a loss, or the other ones are currently floating in either profit or drawdown or whatever. They're currently open trades. 4 of them did not hit entry and are no longer valid. We went over those, and then 3 of those, 3 more did not hit entry, but those are still valid. So we have 4 that are no longer and 3 that are still valid. I went over all of them in the video. Now it's time to tally up the entire percent return. So going through all those trades, I'm going to quickly tally these up, and I will let you guys know in 1 second. So just bear with me till the end here. And if you guys were keeping tally with me, you should have the same number that I have as well. And if I am off, I do apologize. You can correct me. And I'll be happy to make that adjustment. Sorry, guys, I'm using my calculator right now, so bear with me 1 second. I'm quickly going over this, so I may make a mistake. I don't try to, but you guys will just have to check me. Almost done. All right, so the total I have through all those trades for the past 2 weeks, if you took advantage of everything that we sent out and everything we talked about, it's okay if you didn't. It's okay if you missed some of them. No worries. We're always here to help you so that you can do it yourself as well. Total 35.77%. Isn't that incredible? Now, I will say that we did not hit 35.77%. The reason why, can you guess it? It's because we took partials. That means we did not hit our full volume to take profit. So we're probably sitting at around 25% return. So if we take 10% away, this includes all the losses and, taking partials. So obviously we didn't hit our full risk to reward, but still the risk to reward was there to where even if we did take partials, which we did, we still had a tremendous return. So I'm going to guess around 25, 26, 27%. Still phenomenal return over the past 2 weeks, guys. You do not even need that much return. And I'm using risk management, as you should be too. So if you're not using risk management, you're blowing accounts, it's okay. Like, you just adjust your risk management and you can still be making huge returns with proper risk management as well. Be professional, be smart. So guys, I know this was a long video. Thank you guys so much. Enjoy your weekend. Have a great weekend, and let's keep on killing it next week. Tune in to our Smart Money Sundays video that will be posted on Sunday. And also, I will be holding a live session Sunday. This will be, I think, July 31st, if I'm not mistaken, if that's the right day. Yep, July 31st, 2 p.m. Eastern Standard Time. So this Sunday, tune in. I will be sending a link here in our Discord. If you don't have our Discord, send us a message. I'll be happy to send you the link. And we will be going over setups for the upcoming week. So hopefully I'll see you guys then, and have a great weekend, and take care. Thank you guys so much.